People who haven't yet had enough coffee, I think will finish eventually and come in back to the room. So we're going to start our banking panel. I'm going to moderate it. My name is Ruslan Chorny. I'm from the Financial Club company. We have Timothy Ash with us, Eric Versavel from ING, Yuliya Bereschenko, representative of the Deposit Guarantee Fund, Julian Khorunzhyi, Ario, and Zoriana Tsebrovska, a Factor Plus manager. When we had a meeting here a year ago, and we're talking about the banking crisis, how it actually evolved, and when it would finish, we can see that for the last year the situation hasn't improved. Maybe it hasn't got any worse, but it's still close to the last year's situation. There is still some light behind the tunnel. There's a sense of some stability, and we're going to discuss those issues, and we'll probably listen to some reasons where we can expect the points of growth and where we can work together to rehabilitate the Ukrainian financial sector to make it attractive for the investors. So hopefully we're going to start with Eric. I'd like to give you the floor, please, and to say a couple words about your own vision of the current situation, please.
Okay, thank you, Ruslan, and nice to be here at this conference. My name is Eric Versavel. I work for ING Bank here in Ukraine. I've been here approximately 5 years. So connecting with what you were saying in your introduction, Ruslan, of course we've seen an incredible evolution of the situation in the banking system. I will try and give some general comments on it, and hopefully we can then have a debate here in the panel and with the audience. You mentioned that the situation has not improved or changed a lot since last year. I will try and comment on that as well. Yeah. First of all, I want to say that to understand what we have, we need to probably be very honest and very transparent about what we need to have to start the banking system again, because it has to start again. It has stopped. We need to find a way to restart it, to restart lending into the economy, and therefore we need to understand what the problem is. Otherwise, it's not going to work. Yeah. In our view, and in my personal view, we are not specifically looking at a short crisis. I think it is much better for everyone, and if we want to try and find solutions for the situation now, to look at this as a permanent state of an almost permanent state of distress in the financial system. This may sound a little bit harsh, especially for those of us and those of you who remember the boom, and I think the boom was 2006, 2007, 2008. In the way that, if we think like this boom was probably a mistake, because the fundamentals of the financial system and the fundamentals of the economy did not support the massive lending that took place at in that specific period of time. So there was an enormous influx of foreign currency lending into the market, but in fact the underlying parameters and requirements were not not sufficient to actually sustain that. And therefore we need to look at the situation before that and at a much longer period of time than just saying on the 1st of December 2013, when the Maidan revolution started and the currency started to collapse, and try and fix that. I think that is insufficient to find solutions for the problems that we have. After all, Ukraine, we must be very honest about that, since independence had only a very few years of GDP growth. And all the rest was actually negative growth. And the financial system was distressed and was not functioning properly, or the way it should function, before the Maidan revolution. I think we need to understand that. I think it's absolutely essential for what we have. So what we see at this point in time, we have emergency measures to try and control a very difficult financial crisis. So these emergency measures were put in place after the revolution, or a few months afterwards. Also a control of the effects of FX transactions in anticipation of the elections in September 2014 and all that. It all was very difficult, and now we have a full set of emergency measures in place. That's what we have. There are many reasons for that. Of course, something had to be done. We all know and we all follow very carefully the statements by the central bank and by IMF on when all these restrictions can and will be released. Because of course, without the release of these restrictions, specifically the capital controls, it is very difficult to talk about the return of investment appetite to the country. That's just a basic reality. Yeah? We also see, apart from the emergency measures, we also see a cleaning up of the banking system, or I should probably say an initial start of the cleaning up. If we closed 50 to 60 banks out of 180, and if the central bank, I don't know if Dimitri Sologub is here or was here today, he himself says that NBU did not close any bank which was not already dead. That means that there was actually no systemic impact of the closure of these banks. So because if these banks were meaningless and were just pocket banks, then their closure does not have impact. And in our assessment and in our view, very important additional steps need to be taken in respect of the banking system, the number of banks and the status of certain banks, and then very specifically also the state-owned banks, before we can start talking about renewed confidence and trust in the banking system. Because what we also see is that the financial markets do not function. There are no money markets. Banks do not lend money to each other overnight. So the money markets do not function, so there is no trust in the system. And there, in that context, it is fantastic and an absolutely great achievement of the country and especially of the central bank and the government, that no retail crisis has emerged in the banking system. There have not been real bank runs. So that's fantastic, because the banks amongst each other do not trust the system, and therefore we cannot talk about the financial system. So that is also what we see. So in our assessment and in our view, the measures and the work that has taken place are preparatory measures, and some very important other steps need to be taken to restart the banking system and to create trust amongst the participants. So if you take this into account, and this is the last thing that I will say, is we still have not addressed, or the country has not addressed, the fundamental problems which existed before 2006, 2007, and before 2013, to create an environment in which it is possible for the banking system to finance and to support investment and economic activity. We have not seen institutional improvements in creditor rights, in legal recourse, etc. So suppose we all start lending tomorrow, suppose all the banks start lending, this is separate from the question to whom we would actually start lending, because that is probably the biggest question. Is there anything left to lend money to? Are there any bankable companies left? But we first need, if we started doing that, we would have exactly the same problems in 1, 2, 3 years' time because of absence of basically legal recourse. The legal system, the judicial system doesn't work. I already mentioned the state banks problem, which I think needs to be addressed. And we should also not forget that most banks, basically the whole banking system, is still distressed because of very large amounts of distressed non-performing debt. And I hope that the two ladies that here will have some comments on that, on how the market is actually dealing with this. But because before there is a solution for that, if you have hundreds of millions and some banks much larger amounts of debt outstanding which is non-performing, you can pretend that it is performing by creating artificially low interest rates and charge the customer 0.5% on grivnia to try and avoid recapitalization requirements, but the problem remains exactly the same, and it needs to be handled before investment and financing can restart. I mentioned money markets. Immediately connected with money markets is actually also the urgent need to start building a yield curve. A yield curve means that you need to have financial instruments which are longer than just a few days or a few weeks. And you need to have the ability to manage your liabilities and your assets in approximate buckets of the same tenor, and we don't have that. We don't have long-term liabilities in local currency. So therefore, assets with long tenors are just impossible to manage or to generate. And that needs to be addressed, and we are trying to help, we are trying to advise, we are trying to make sure that everybody understands that that is very essential, that it is not just that lending will not restart just by instruction or by convocation by a minister or even a prime minister who will call us into his office and say, start lending. That's not how it works. There are certain things that need to be in place before we can actually do so. I hope this helps as an introduction for the understanding of the issues the way we see it.
Eric, thank you. I just wanted to ask you another one, if I may. Eric, I'm sorry, I wanted to ask another one. If you may, please hold the microphone. Eric, my first question is, Valeria Kontareva, president of the National Bank, she used to be also in the ING Ukraine. Does your bank feel comfortable of communicating with the central bank because Ms. Kontareva used to be there in your bank?
No, not because of that fact. I must, and I can absolutely, without any question or any doubt, state that access to the central bank, to the senior management of the central bank, for all foreign banks and for all local banks is absolutely fantastic. We would never ever hope to go back to the previous days where we could not reach the senior management. This is absolutely excellent. We can have every open, transparent discussion with the senior management. Every meeting we have with Fliffy, with the foreign banks, we start by praying that they will not leave.
Okay.
It's true. You don't believe me, but it's true. About the praying.
And I also wanted to ask you if you can tell about your own case, on your bank's case. You've been here for a long time, but you were lending only to some specific companies that work internationally. You are not working with the Ukrainian customers. mainly. What should change or what should influence your work for you to start lending actively to the Ukrainian actors, I mean to the Ukrainian businesses?
Well, I'll keep it short because this is a very complex and long question. First of all, every bank has its own strategy, and we don't need to explain or defend what we do or why we do it. It is a global strategy that we follow, and that's what it is. Secondly, it is not true that we don't work with local companies. We actually have a very large exposure on local companies, which we book either in our local legal entity or in other offshore legal entities in Amsterdam, depending on the nature of the transaction and depending on whether it's export related or not. So we are still very active in the international segment of the business. We are still very active in the agri-exporters segment. So our business in that sense is ongoing, and we are a very sustainable bank. We have very good financial ratios here in Ukraine. We are doing well, but we also have, as I have suggested, like all banks who have operated in the country, also have large amounts of debt exposure which needs to be managed, which needs to be restructured. And on some of these loans, of course, we have taken losses or we will be taking losses, and this is across the banking sector, and this we accept that this can happen, but in Ukraine and in certain companies, it's been very serious, it's been very large, and maybe that is a topic for the panel or for the debate later on. A lot of that relates to what we can probably call old economy, which raises the question, what exactly will the new economy look like? Is there a model for that? We can all do a lot of old economy bashing, conglomerate bashing, oligarch bashing, but we also need to know what the rest of the economy will look like. And not sure whether we already see that, and also not so sure. I think this is also not so controversial to say. I think most people know and understand and see that the new economy is operating not necessarily in the sunlight. Huh? So, and I am not sure that that model is then what the country really needs. There needs to be, if everything operates in the shadow, then it's not going to work. Huh? Yes, does this answer your question? I can understand yes and no in Russian, so I mean, if you
Thank you very much. And you are right. And I don't know people who can be absolutely sure what kind of new economy, how it will look like, and how it will be applied in Ukraine. And we can see right now that there is new government, and hopefully they will develop this map of developing Ukraine, and how much it will be different from the government of Mr. Yatsenyuk. I have no clue about it, and the reforms that we're gonna see, we probably will be able to talk about these reforms 1 year from now. And everybody understands for sure that we need changes. And what else? We need to draw the right conclusions from the mistakes we made. But probably as of today, the collection of a lot of mistakes. Actually, we have guarantee fund, deposit guarantee fund, and they have to solve problems of 70 banks that are under liquidation, and they are selling assets of these banks. And and I hope that we have some news about it. Please share it with us.
I'll probably join the English-speaking part of this panel by speaking English. I joined the Deposit Guarantee Fund fairly recently, in January this year, and been focusing on creating the new department in charge of the asset management and sales. We developed the new regulation which concerns the asset sales, and we are still waiting for the Ministry of Justice to approve this regulation. What seems to be a very basic process for a Western investor is actually quite a difficult task in Ukraine. And we wanted to make sure that there is a minimum level of transparency and publicity in the asset sale process. If you think about it, the Deposit Guarantee Fund is managing the assets over 400 billion hryvnia, which is 1/5, 1/4 of Ukraine GDP. And our global task is to recycle these assets back into the economy, into the private sector, give it back to the private hands. As a government agency, we have very limited means of working with the non-performing assets. In most countries, the regulator has the power to negotiate restructuring, haircuts with the debt holder in good faith. Unfortunately, we don't have such authority in Ukraine, so we can only follow the foreclosure litigation route or the asset sale. Obviously, given what the previous speaker confirmed to me, because of the poor creditor protection rights in Ukraine, the poor condition of the judicial system in Ukraine, the litigation route is very difficult. And even given the normal conditions, no lawyer working for a failed bank or a government agency can be as effective as a private sector lawyer defending the borrower's interests. So for this reason, we are focusing on selling the assets. The regulation, which we hope to be launched officially very soon, and we already work according to this regulation, ensures the basic transparency related to vendor due diligence, to public disclosure, buyer due diligence, and the bidding process. First and foremost, we fixed the public disclosure site for every asset that we put for sale. We issue an extensive teaser with all the information, bearing details related to the banking secrecy and the personal data. All this information is posted on the website of the fund, of the bank to which asset belongs, and also this advertising is placed in the published media. At the same time, we are creating an email alert list, and we would like to invite all investors who are interested to get on our list. We distribute an email alert as soon as a new asset is posted on our website. For all assets over 100 million hryvnia of the book value, we also prepare a more extensive presentation about the actual loan, the collateral, and the group of borrower without naming. So on our website, you can check already quite a few cases that we recently started to disclose to the market. We would like to ensure that potential investors have enough time for due diligence, so we anticipate at least 1 month is required for investor to see the teaser on our website, to sign a non-disclosure agreement, and to get access to the data room. Unfortunately, the data rooms in the banks which keep the loan files are physical at the moment, and these are Xerox copies of the documents, which does not create enough capacity for many investors to access the documentation. In this respect, we are now telling the banks to digitize all the loan files so that we create electronic data rooms, and in the future we hope we will be using virtual data rooms which any investor is used to use globally. Today, following the lead from the central bank, which by the way, out of 400 billion hryvnia worth of assets, around 1/3 of assets are pledged to the national bank as collateral. The National Bank about several weeks ago disclosed the list of all assets which are pledged to them, and we are following their lead. Today we are publishing all property which is on the balance sheet of 65 banks. So you can already go onto our website and see all the physical assets which are available for sale. And within a couple weeks, we will do the same for all loan assets. All loan assets will be disclosed on our website so that investors know exactly what will be sold in the years coming, hopefully faster. What else? We've been reporting on our sales figures on a weekly basis. The conversion rate is not great. Every week we are announcing sales worth over 1 billion hryvnia. The results are in the tune of 150 million hryvnia. But we do hope that the full transparency in the process and more information available and more investors and buyers coming into the market, we will be able to improve our results.
Thank you very much. I'm trying to figure out this. You will require all the files, loan files, to be in digital format. That eventually you will get this client. Yes, all this information will get. No, we are talking about 70 banks that are under liquidation. Now I'm getting it. Now you have touched the issue of how difficult to do legal arrangements and judicial system. And the last case, you were not able to prove that Ogre Business Bank that is in Donetsk, that because you don't have originals of loan files. So this customers are not owing anything. And probably this requires digital format for all the documents, not to look for originals of the documents. And I just wanted to ask our lawyers to participate in the discussion. What is your vision? What will be the relationship of the borrowers? And what have to be done to make sure that solvency of the borrowers is improving, and to make sure that the loans are performing loans, not NPLs. And thank you for this opportunity to talk about it. I am representing the law firm, and we have customers, borrowers, and as well we are working with the banks to collect the non-performing loans. And a little bit about statistics to understand the scope of the problem. national bank statistics, we have 109 working banks and 73 problem banks that guarantee fund is dealing with. But tomorrow it can be different. The figures may change even tomorrow. And the non-performing loans of the working banks are 173 billion, and arrears to guarantee fund, so 400 billions are assets, but non-performing loans are about 400 billions as well. After court adopts a decision, more than 5 million documents, and the bankruptcy liabilities, it's about 120 billion hryvnia. To compare it, so the budget revenues, national budget, is 590 billion hryvnia. So the assets and non-performing loans are more than national budget, and the trend of non-performing loans are increasing, and the real amount that we are getting, this amount is shrinking. I'll dwell about it a little bit later, but what can I say about banking system? The working banks, they have easier time, because what they can do, borrowers are trying to restructure, that's not to deal with the courts, because nobody knows how it will end up. Nobody knows. But working with the customers, that banks are not looking for compromise to restructure financially the arrears, the debt. And accordingly, court is reviewing this case, so the bailiff starts to collect it or whatever. And the war of the bank and the borrower, and most of the banks, they have professional team of lawyers and other borrowers. Sometimes they can hire lots of lawyers to it, and with the guarantee fund, and the borrowers are in good shape, because legislation is favoring the borrowers actually, and the activity of the guarantee fund helps borrowers actually. Why it is so? First of all, the private business is having much better lawyers than the government, the governmental institutions, and they have to pay court fees and whatever. And on many occasions, that banks that are insolvent and they wanted to get the originals of the loan files, and when the guarantee fund, deposit guarantee fund, wants to sell it, there is no competition to buy the assets, because only mostly the borrower knows about selling of the assets. And they are utilizing the gaps in the legislation for their benefit. And the assets that are not sold are deteriorating in value, so much less will be collected for the borrowers. So the value of the assets is 400 billion, but it will be good in case they will sell it for 60 billions. And right now there are serious reforms. We have already draft laws on amending the bankruptcy law, one more draft law on performing the court decisions, kind of collecting this amount, and document about bankruptcy of natural persons. And reforms started pretty actively, but right now the whole activity is frozen, reviewed now in the parliament, but we have problem with predicting when all these draft laws will be adopted. Without reforming legislation, so borrowers will be in good shape. Actually, they will protect their interests. But and not always the mechanism of bankruptcy, because major companies, including international companies, so for international companies, they are risking their image, so major companies don't want to restructure the debts. For medium-sized companies, we need to understand there are 6,000 cases regarding bankruptcies, and all the corporate borrowers are legal entities. In case legislation will be adopted, we'll be able to protect the interests of the banks, and we'll be able to reduce the losses of the banks due to NPLs. Thank you very much. I'll probably agree with Julian that right now we are working actively with the MP, members of the parliament, and finally we are getting from them some understanding of the situation. And Banking and Finance Committee of the Parliament actively works with the Independent National Banking Association, and pretty soon we will see some progress, and at least half of the laws will be adopted. I just wanted to give the floor to Timothy Ash. Timothy, I know your used to know your predecessor coming to Ukraine, and interested pretty actively of the Ukrainian bonds issued by Ukraine. Most of the public issuances you know about it, and the last well-known information about Nomura Bank. It's Prom Bank that is bank. It was sold to Delta Bank. And I just wanted to get your opinion. What is your vision of Ukrainian debt, and what are the prospects for your banks in this respect?
Thank you. It's good to see so many people still in the room at this unearthly hour of day. So thank you for staying around. I'm certainly not a banking expert, and so apologies for that. I'm more of a macro policy, top-down kind of person, and I guess I'm probably in the wrong session to talk about banks and all that kind of stuff. So maybe, and again, I mostly look at sovereign, so the sovereign story. So that's my full disclosure that I know very little about banks. But anyway, when I look at countries, and I'm a sovereign debt guy, so when I look at countries and I look at banking sectors, basically, very simplistically, I view banking sectors as either assets, liabilities, or flat from a sovereign perspective. So in normal countries, banks are assets. I think I'm trying to think of a positive example globally, but let's say Germany, for example, where basically banks channel funds from savers and lend it out to people who can make better use of that, and the banking sector can be a driver for growth. Then I think of countries where banking sectors are liabilities, and there's been many examples of countries that have had banking sector crises. I think of Turkey in 2000, 2001. It's interesting that the SDIF model, which Ukraine is using, was incredibly successful in the Turkish experience after 2000 and 2001, and it's been one of the reasons for the success of the Turkish economy has actually been the bank restructuring model. So banking sectors can be very positive, they can be assets for growth and development, and then they can be liabilities and they can be a real drag on growth. And in fact, in the Turkish case, and I think in the Ukrainian case, if you go back 2 years, and there are many other examples, where banking sectors are mismanaged, they can be a huge drag on growth and development. You know, if you think of the collapse of banking sectors and then the impacts in terms of financial stability, exchange rate, inflation, macro instability, but then also on the sovereign balance sheet in terms of cleaning banks up can be very, very costly. I guess in Ukraine's case, and I think if you look at the experience of Turkey and then look at the experience of emerging Europe, you know, basically what I view Ukraine, and I think the outside view of Ukraine from certainly a sovereign debt perspective is still very negative. But for me, one of the big positives, if I look at Ukraine, is actually what's been achieved in central bank policy and then banking sector development and addressing some of the key issues. And so for me, in Ukraine's case, I guess the plus is that the banking sector has gone from, I guess, a liability at the moment in terms of, I think the potential impact from the banking sector in terms of systemic impact into the sovereign balance sheet is probably resolved by, you know, pretty impressive action, I think, by the National Bank of Ukraine over the last 2 years, you know, closing 70 banks. It's quite, in my perspective, and I've argued this previously, I mean, there are some real heroes at the National Bank of Ukraine doing life-threatening activity, closing banks that, you know, if you look at the deputy governor or the governor will say these enterprises were money laundering criminal entities. And I think there are some people on the stage also who are real heroes in terms of what the action they're taking in trying to further that restructuring of the banking sector, particularly if you look at the SDIF activity. So I think we need to commend the National Bank of Ukraine, the SDIF, and other agencies that are trying to continue this cleansing of the Ukrainian banking sector. But from where I sit now, I don't see the banking sector as a huge liability. I think worst case, it's a couple of percentage points of GDP in terms of a worst case hit in terms of the sovereign balance sheet. But I think the other thing I'd argue is I think you need to be pretty realistic. I think the assumption that your banking sector can suddenly be an asset for the economy and a driver for growth and a driver for lending. I mean, I think that one of the pretexts of the question was, you know, how quickly can Ukrainian entities get back on international capital markets? I'd hope that doesn't happen very quickly, frankly, because if you do that without you carry out the right kind of reforms in the banking sector, I think you're going to get in a very difficult place very quickly. And if you look at the experience, interestingly, in other countries in emerging Europe that have had particular problems in the banks, not just Turkey. Turkey was an exceptional situation. If you look at the banking problems post-2008, the global financial crisis in places like the Balkans, Central Europe, I wouldn't characterize banking sectors in these countries as assets. They're not driving growth. They're basically flatlining. They're either assets or liabilities. And remember, you know, 2008, that's 8 years ago. We had the global financial crisis, and if you look at places like Serbia, like Croatia, many of these countries, I mean, you know, it's not the banks that are driving growth. They're not pushing lending out. They're still cleaning the balance sheet of banks, making the banking sector healthy. So presumably in 5 or 10 years down the line, the banking sectors can be drivers for growth. And I think if you look at the Ukrainian experience, again, there's still a huge amount of work to be done. Again, the commentary about the SDIF, you know, it's great you have an agency established like the SDIF, but, you know, with 40 people working at the entity, with huge amounts of legal changes still required to make the functioning of SDIF effective, even with the best people possible in key positions in SDIF. I mean, you know, bankruptcy legislation, judicial reform, fair and transparent process around the tendering of assets for disposal that I understand is still probably not there. You're going to end up with a situation where I think you're going to have huge continued reputational damage around Ukraine and around the banking sector, which I think will damage longer-term growth. And interesting, I mean, I think this expectation that suddenly the banking sector can be back in a healthy and fit state and an asset from a sovereign perspective, I mean, again, is pretty farcical, frankly. I mean, going back to my experience, which is the 2001 banking crisis in Turkey. I mean, Turkey transformed its banking sector remarkably in probably 2 to 3 years. Incredible, BRSA and SDIF. But the environment up to 2008 was very, very different. I mean, let's just be honest. I mean, in that period, the global finance was still in expansionary mode. There was lots and lots of banks wanting to get into emerging markets. There was a huge number of bidders, foreign bidders, for assets that SDIF was selling. Turkey was a booming market. I mean, if you look at the situation now, there were no foreign bidders, basically. I mean, I don't want to particularly focus on ING. I mean, we could talk about Nomura for that sense. But, you know, if you look at countries that are going through this process, have assets to sell, I can think of Serbia with potentially troubled banks that they're looking to sell. I mean, there are no bidders left. I mean, there have been waves of foreign banks having interest in moving into emerging Europe. Dutch banks, British banks, German banks, Russian banks, Middle Eastern banks. I mean, essentially, everyone's got in and got burns. The global banking system is contracting massively in London. So, again, don't assume that there are some kind of magical kind of foreign investors going to come in very quickly in terms of the Ukrainian banking sector. So I guess, I don't particularly want to talk for a huge amount of time in terms of the banking sector, but I guess my key conclusions or key messages is there's been some really good stuff done in the last 2 years. Really, really impressive, brave things achieved at the National Bank of Ukraine and certainly the SDIF. But the job's not really finished, but don't rush it. I mean, don't rush to sell assets. In my mind, don't rush to sell assets because there's going to be very few foreign bidders. It's better to get the process right, that you then have something to market at the sovereign level outside the country. I mean, maybe I'll finish in terms of foreign perceptions. Again, I'm a sovereign debt guy, so I compare countries across the whole region. And I guess when you mention Ukraine, and one of the other problems in terms of potentially you're looking to come back to fixed income markets, if you mention Ukraine to most foreign investors, I mean, it's like, you know, toxic waste initially still. I mean, the positives about the Ukraine story in the last year and a half, some of the really big achievements that have been made despite, you know, very challenging external environment, very challenging domestic politics, you know, the fact that you've had no IMF money for 6 months or more than 6 months, you've had no functioning government for a couple of months, you still had the problems in the East, you've had trade, transit bans and all that kind of stuff. You know, you still achieved enormous amount in terms of macro, you know, fiscal adjustment, energy sector adjustment, balance and payments adjustment, you know, some really big achievements at the National Bank in terms of administrative reform in the National Bank, reform of monetary policy, inflation targeting, and then the banking sector stuff. I mean, this is all good news stuff. But externally, I'm afraid, you know, the corruption, rule of law, the lack of it, you know, still, you know, that's still the big issue externally for foreign investors and potential foreign bank investors when they come into Ukraine. So maybe you need to work a bit harder about selling the positives that you've achieved that I've mentioned. Corruption and rule of law is really important, and that's going to determine the long-term growth agenda. But maybe don't rush in terms of the bank restructuring and reform effort that, you know, people like you are making some fantastic progress in, but get it right because you want to sell the right kind of message to foreign investors when eventually, 5 years down the line or whatever, there are foreign banks willing to come back into markets like Ukraine. Remember, at the moment, most of the foreign banks here are looking to get out still, frankly. So on that cheerful note, I will end.
Well, I think it might be surprising to listen to your observation about the National Bank. It's not quite fashionable right now in Ukraine, and I can explain you why. Maybe that's the thing that you meant when saying that. You mentioned Turkey, and I remember talking to the former banking oversight officer who was in charge of that reform, and what he was saying is that they put half of their banking system in the grave overnight. They did it very fast, and we have been observing this process going on for 3 years now in Ukraine, and maybe there's certain agony about it. Maybe for some others this is quite painful, and we cannot see this fast evolution like it happened in Turkey. We could make this purging process in the banking system quite sharply and fast. Maybe the Ukrainian mentality is standing on the way, but it's not going to work here. I don't think it's going to good practice for Ukraine. I'd like to also ask Zoriana to work with the financial sector debts, and can you please tell a little bit about that? Thank you, Ruslan. Since I'm the last speaker of our day one, so allow me to make a very general statement, maybe a little bit tricky and funny, because there are so many important things that were mentioned, both positive and negative. Changes in Ukraine are still happening anyway. Whether it is fast, whether it is not, but I think we're going to see some major changes in the future. Just briefly about the last session, about the last panel, in terms of banking, stress, and fixed incomes, from the global market standpoint is a total distress. From the Ukrainian standpoint, for ourselves, the distress has been out there for years, and how different it is from the other crises we have survived over time. It was actually in the fact that we have accumulated certain assets already by the time, personal, commercial, business, and when it all collapses, just because they killed the number of banks and the company that it thought to be reliable were losing their paying capacities and solvencies because of the banks. And it's like a house of cards that is falling down. So the question is, when we're going to build a new house instead? What we have in terms of our distress, we have primarily in the financial sector, we have challenging assets at some of the state-owned banks and commercial banks, which they cannot sustain themselves. In most of the cases, they have curators appointed by the central bank who actually control their activities. But in order to actually agree upon selling any of the assets, this has to be coordinated with the national bank. And actually, to get a good discount is virtually impossible. So, the debtors who cannot make successful arrangements with the financial institution try to find alternative pathways like bankruptcy or any lawsuits to actually prolong the repayment or reduce the amount through the court ruling. Another one is subject to the deposit guarantee fund. That procedure and their structure is much more democratic bureaucratic. And the difference of the state-owned banks is that in case commercial banks are trying to sell the liability rights by their assets or real estate, but the guarantee fund is actually selling all the bank's assets, including the real estate that they kept on their balance sheets. More than 90%, around 95% of all the assets are actually the liability rights, are provided, secured and non-secured. Potentially, the investors are interested in the assets which where they can get any money for, or getting the assets that were in collateral. The lawyers have many times mentioned how time-intensive and money-intensive this process is. In case we want to maximize the profits in selling the debt claims, then I'm sure we have to convert those recourses or actually chosen possession in something tangible, and only then we can actually claim some higher prices in today's reality. What question hasn't been mentioned yet? The whole number of there are so many different loans that were lended outside of Ukraine and guaranteed by Ukraine, including the large infrastructure projects or large facilities funded from the investors' foreign accounts. Basel III and Basel IV requirements with today's rating of Ukraine makes banks to actually attempt to sign off those assets, because according to the risk assessment management, the Ukrainian assets are close to zero. So any kind of sale at a lower price is actually about profitability in the short run. So the longer we're cleaning this system, and the longer we are keeping our ratings low, the more number of foreigners will be considering selling their assets in Ukraine. What I could add about the general picture of the market, of the distress market, I was raising this issue last year, and I'm going to do it again now. We have two-level banking system. And why it is so painful from the legal and natural persons are having their attitudes to the killing of the banks because they are losing their money. The existing system could not provide full reimbursement of their deposits and also whatever remained on their current accounts. And this has been the most painful for ourselves, really probably caused the most of the stress and de-stress that we're now talking about. From the positive things, given lending is no longer in Ukraine, the money exchange is actually not existent in between the banks. Our colleagues from the banking sector pointed out that they normally have interaction with the central bank or with 3 to 5 or 10 banks maximum. Lendable companies are not existing in Ukraine. Bankable. They cannot assess the risks properly. If the risks have to be put in the pricing, in the rates for the loan, the business will not afford it. So, therefore, we have this outsourcing services flourishing in Ukraine. We have a lot of demand for IT services. Maybe that's not yet the key driver for the economy, but still triggers some positive change. Quite successfully, agriculture has been doing quite successfully because hryvnia went cheap, and therefore it has some of the advantages for exports. There are some negative trends in terms of foreign currency regulation, but in the internal session we were promised that all of the restrictions will be abolished, and we will have access to foreign currency. Given all the positive changes that exist today, and having listened to some positive insights from most of the speakers today, and the fact that you, dear guests and participants of this forum, have found enough time to spend here a whole day and talk about everything and share information, I think this gives some promising idea that it's going to work and we're going to make it better, and hopefully we're going to build new Ukraine, and from the quality standpoint. Thank you. Thank you very much. Well, the organizers are already saying that we have exceeded all the time limits, but I'm just going to say a couple of words at the end just to the wrap up, and then we're going to do the Q&A and during the networking. Today I attended the meeting of the Parliamentary Committee on Banking, and what I heard there was quite surprising for me. Different investors came to us and were asking how is it going, what the plans are, how is the Ukrainian economy doing. After the end of cooperation with the IMF, so far nobody's coming in, nobody's talking to us, they said. But nevertheless, I wanted to mention another important thing. In December, when the central bank made a decision to capitalize the banking system, according to our analysis, 67 banks could have an opportunity to grow their capitals up to 500 million hryvnia, which in our assessment, at least 45 of them would not be able to do that. But not less than 25 banks out of them, which are good and sustainable banks, being active right now. We'll be trying to seek more investors, and we'll be trying to look for someone they can work with, because the existing owners do not have enough money to actually increase their capital, and therefore those companies need to make a decision what to do with that during the year or by the end of it. So what I'm going to say is that there's an interest to Ukraine. Low prices are quite attractive, so I wish you every success and go ahead and do it. Thank you.